Guys, so I just want to show you how I trade. I typically trade on the 15-minute and 5-minute time frame, but first I gotta know my bias, so I go to 4 hours and see if it's bullish. So as you can see, if you look at the previous histories, it's still going up. It retraced here, but now it's going back up. I don't really know where it's gonna go, but I gotta know where my bias is first. So it's either you go to a daily time frame or a 4-hour time frame, right? So as you can see, price is still moving up. If you look at the trend line right there, it's very bullish, right? So what I'm gonna do is I'm gonna go to my 15-minute time frame, right? I'm gonna make sure that I drew my my support and resistance levels, right? But it's really up to you which area you like to take a look at. So you got to know where your demand zones and your supply zones, right? So in this case, in this area, there was a huge wick in the 15-minute time frame. I could target this area for a huge retracement back, but if I want to just scalp, take quick profits, 30 pips, 50 pips, I look at three candles, so three greens. So since I'm gonna look for buys, I'm gonna look for three candles, so such as this ones. So there was a huge red one. Um, could be an order block, could be a small order block. If you go on a lower time frame in 5 minutes, you can tell that there is an order block right there on the 5 minute time frame. So, and then I'm gonna draw my Fibonacci retracement, right? So Fibonacci retracement right there. If I go back to 15 minutes, that's my fib. I usually wait until the price goes to 78, or it could be this area. This could be an area of liquidity, so it could go down here. I don't really know. So I like to make sure that I enter around 78 to at the end of this wick. It really depends on the price action, so I'm going to wait. I go back to 5 minutes, 5 minute time frame, but I'm going to prepare my buys. So I'm potentially I would want to buy right here because just there's a wick. I don't want to get wicked out. So I usually do about 1 to 2 ratio. So or 1:3. This would be good. I don't want to put my risk up here because if I did, it's too much risk. I would want to wait here and get tapped out. So I will entry a buy signal right there. Okay, I would basically click this area, save it, and boom. And then I'm just gonna wait for the price action, and it goes down. Wait, wait, still not. Okay, it's still ranging. Okay, now it's going back to price. There you go. It's going back to our order block. Oh, there you go. Now we're in the trade. We're in the trade, everybody. Boom. Still going back down. Okay, you might get stopped out. We'll never know. There you go. See, you might get wicked out. So you gotta be careful. Right? You gotta be careful with your risk. All right, there you go. There you go. So at that area, you gotta buy. Right? This was really easy. You can definitely do it on your own and see if this one works out for you. So as you can see, what I explained earlier, I think my video got cut off there, but as you can see, this it went down to this area. I know there was a wick here that there could be a potential liquidity grab, and I didn't want to trade above here because that would have that almost hit my stop loss if I did. So I want to enter somewhere in between this area here. So I did enter there, and as you can see, the price went for a drop, and then boom, there you go, full take profits, and that made me how much? How much was that? I think it made me the last one. The last one made me a few dollars, but yes, you get my point. If you guys have any questions, let me know, and I'm more than happy to answer them. Thank you so much for watching this video, and you guys have a good day. Stay good, do good. God is good all the time.